And okay, today you can see, okay, Aussie USD, today you can see that I actually have a different setup on my screen. But there is something that I just want to demonstrate to you. There is something that I want to demonstrate to you. That's why I brought such a setup in my screen. Usually we used to do without any indicator, but I just want to show you something as we are analyzing. So it's GBP USD, Aussie USD, and then gold. Okay, let's start with GBP USD. There we are. So okay, in these two windows, this side I have the 4-hour, and then this side it's 30-minute. So it's our higher time frame than our lower time frame here. We don't have the 1 hour in this scenario. So what we're actually going to be looking at, it is just simple things. It is simple things that we really undermine when it comes to trading. For an example, this is a moving average which shows you the direction or the power, meaning if price is below it, it's actually a seller's market, and if it is above it, it is buyer's market. Same thing applies here, but this side now we have the stochastic here. Maybe those who are interested in the settings, let me check, but it's actually like 37.7. Let me check. Yeah, it's 37.7. So here, this stochastic, it plays a very huge role in our trading. I've been using it for the past 3 weeks. There was something that I wanted to add. For an example, it helps you to avoid actually buying markets which are already overbought and selling markets which are already oversold, because one can take an advantage of a certain move. Maybe let's say this downtrend, one can take an advantage of this huge impulsive move and sell, yet already the market is oversold. So such indicators, they assist you, or they just decrease your responsibility of analyzing using your eyes, because you cannot clearly see with your eyes when the market is overstretched, because you are going to be overruled by emotions and fear of missing out. So okay, let's analyze this pair. So looking at our higher time frame here, we can see that we had seller's market. We had seller's market, as we can see that the sellers took the market up there, and they are down here. But looking at this move right now, you can see that we have this very huge impulsive wave, and then we have this next wave, and then now it's a beginning of a corrective. Remember, when it comes to selling, we sell when the market is correcting. So the beginning of this corrective here, it doesn't necessarily mean that we should sell now. Why? Because we can see that the momentum was dying. As you can see, a big wave and then a small wave afterwards. So meaning the sellers, they are weaker than they were before, which can mean that this breakout from here going down to this level here, it was not a long-term breakout, meaning the market might continue in the near future with buyers. So in that scenario, what should you do as a trader? Okay, let us come back this side. Looking at your lower time frame at the same pair, you can see that when it comes to the moving average, it is the same period. It is 150. When it comes to the moving average, you can see that price was moving down, and then now it is shifting, going on the upper side. Meaning if the price is breaking the moving average, it means that now it is shifting direction. Meaning it is, this corrective is going to continue going a bit up before it collapses and goes down with the impulsive move. So meaning now what we can do as traders, because this giant move is on a higher time frame, the downward move, if we are to wait for a sell, we can find ourselves selling maybe on Wednesday or Thursday, because it is a hard time frame. It will take much time for price to reach this and finish the corrective and then continue with its impulsive. So what we can do now, we can take advantage of the corrective because of the momentum. Listen carefully. We take advantage of a corrective because of a dying momentum. For an example, if we had this big wave and we had another big wave, we were not going to trade a corrective, because in that scenario the sellers will be still stronger. But now the sellers are showing signs of weakness with this small impulsive. You see, so that's why we are going to take advantage of this corrective, but based on the lower time frame. So here, what you can wait for as a trader, it is actually to wait for, let's say, remember that scenario of pattern breaks, whereby you identify a downward flow of the market and you wait for that downward flow to be broken, for an example here, and then you should make sure also that your indicator is oversold. This one is very, very important. Either you are using an RSI or a stochastic, you should make sure that it is oversold before you buy. But what you should know is that oversold doesn't mean that oversold doesn't mean that you should buy, and overbought doesn't mean that you should sell. It doesn't mean that you should sell. However, it warns you that, okay, price is oversold here. It is likely that it is going to go up. It doesn't mean that, no, just buy, but it is warning you that be careful, price is about to go up. So now in this scenario, you can either buy it, but remember, we do not buy when the market opens. We do not trade when the market opens, meaning what you can do is that, okay, we can let this market flow as it is a lower time frame. It will take maybe 3 hours for the market to push all the way up and then come back again. When it come back again, and then we buy it, or we buy it when it breaks this scenario of a range here. We shouldn't be afraid that initially the market was moving down, because the sellers are getting weaker. And one thing that I've seen, which I've kept a lot of people waiting without being admitted. They will forgive me. One thing that I've seen, which destroys a lot of traders, it is the issue of criticizing indicators. This one, I'm just going to put it roughly like that. It is the issue of criticizing indicators. Even me, I respect price action and I use it. It is my basic type of analysis. But I have discovered in my trading that the power of indicators is being undermined, because we had a lot of people preaching that indicators, they don't work. Yet indicators, they just report the data. There is nothing strange. They just report the data that, okay, price is oversold. I am going to show you there is no need for you to calculate anything to see that price is oversold. Okay, price is moving up. I am going to show you there is no need for you to study that. So the indicators, they make things simple for you. So it's actually simplicity, but it becomes a problem when they even confuse you. So you should use indicators that work for you, indicators that doesn't confuse you. You should know the reason behind that particular indicator. So let's go to the next pair, AUD. There we are on AUD. So you can see, like, from the previous week that we're just having some aggressive moves when it comes to a lot of the major pairs. Because even here you can see that market was moving up and then it broke and it started collapsing all the way down. And now we have a question on what are we going to do right now, because we want to trade. So how are we going to trade? So it's simple. Here in this scenario, we can see that the market has just finished correcting with this move here. It has just finished correcting, and it's like it has begun this kind of an impulsive again. But now here is a simple tip for you to be sure that is this green candle or this small move, is it still part of the correction, or it is just a small move which will continue the impulsive? You have to make sure that you wait for it and identify its length, because in the high time frame you can see that it's just a green bar, but here it's a piece of candles, more candles in the 30 minutes. So you have to wait and see if really is this a wave, or it is just a small pause and the market is going to continue going all the way down. But now here is a secret tip, and here is is a good thing for you. The stochastic, you can see that it is oversold. It is oversold, meaning if it is oversold, we are not supposed to sell because the market is already oversold. So this is just a warning to avoid panic, you see. So what you can wait here, what you can wait for, it is to, let no one draw in my screen. It is to wait for the market to push up and then maybe wait for your indicator to be overbought. Remember the strategy that I once shared on YouTube about price being under the moving average and then waiting for stochastic to be overbought like this and then you sell. So that's the same thing that we are waiting for here. The only opportunities that we had in this downward move, it is firstly this opportunity here where the stochastic was above and price was below, and also this one where price was below and the stochastic was above. So we are also waiting for that same scenario. Wait for this indicator to push a bit up to the overbought zone, and then you are good to continue with this sweet aggressive move here. I hope that's clear. So you just indicate this pair down in your trading notebook that, okay, I'm going to be buying, I'm going to be selling Aussie USD when the RSI reaches overbought. So it's simple like that. So let's go to gold. I really like the fact that the pairs have been behaving in a almost similar way from last week, because we ended that week with huge impulsive moves. So here, when it comes to gold, there are a lot of things that we really need to correct when it comes to our mindset as traders. There are a lot of things that we need to correct. The first thing, it is the issue of trading gold, or like trading Nasdaq or volatility 75, because the goals there, a lot of traders, they have a mindset of saying, I'm trading this because it is going to give me huge returns in a short period of time. And then when they are trading it, they are trading it differently from trading USD JPY or trading JPUSD, because they esteem it as something that is going to give them millions in a short period of time. And then it leads to poor analysis. For an example, a lot of people will never analyze the market. They will just see maybe that the market is slowing in a downward move, and then they will put a lot of selling signal. They will put a lot of selling signal, selling, because they believe that it's going to give them huge return. So they don't want to spend enough time analyzing the market. Yet, if you are going with that mindset, it will really affect your trading. So what you should do as a trader, it is actually treating it similar to all the other currencies, even when it comes to lot size. Make sure that you decrease your lot size, because you know it's volatile, and it gives huge returns as well as it takes huge losses. So make sure that you decrease your lot size. Don't hope on making billions out of this pair. So okay, let us analyze the market. So same thing, it's an impulsive move, but if you can look at this picture here, you can see that it is a breakout from this structure here. It is a breakout from this structure here. Oops. Nope. You can see that it's a breakout from that structure here. So it is still at its fresh level. It is still a fresh breakout, and we can see here, I want to show you something. You can see here that the sellers, they began the move here, they took a break here, and they began the second move here, and they took a break here. So seeing the second move comparing to the first move, you can see that the strength is still promising. The strength is still promising, meaning the sellers, they are still aggressive. The sellers, they are still strong. So those are sellers that we want to go with. Those are sellers that we want to go with. So if we have seen that, then now the most important thing, it is to spot the corrective, because remember, every trade that we take a trade in a corrective wave. If it's a downward move, we take the sell from the corrective wave, meaning from the buyers. So if you are selling, you cannot sell to sellers, you see, but you can sell only to buyers. And if you are buying, you can buy only if sellers are there. So for us to sell, we need to see the buyers. That's why I say we take our sell in a corrective wave. So if we see buyers or a corrective wave, that's where we say now we are waiting for selling opportunities. And we only sell when we see this corrective being broken, meaning we look at the pattern within a pattern in a lower time frame. For an example, we had this corrective going up, just something like this, and it was broken around here. It was broken around here, meaning if you were entering this was your first option. However, before you enter a pattern break, it is very, very necessary for you to understand how was the price before it broke that pattern. Understand the momentum before that pattern was broken. For an example, you can see that this corrective wave was led by buyers and they pushed up, corrected, but after they corrected here, they failed to push up again. They struggled here, meaning it is a good thing because you can see that, okay, now it can happen that my big boy, who is this seller who took the price here, has came back in here again as he was back here also. So you can see that, okay, it's a good thing. I can see my buyers, they are struggling, meaning my guy is back again. So remember the issue of breakouts, that we said we can enter breakouts in the breakout at first attempt, or we can wait for a retest, something like this, you see, something like this. So now what I can give advice to you is that, okay, as the market opens, you can see that now we have again a new channel or a new structure here. We have a new structure here. It's either you can enter as this structure is being broken as a sell, or if you want further confirmation, you can wait for your RSI to put your stochastic to push a bit up into the 70 level up there, so that it will be clear for you that, okay, now price is collapsing all the way down. However, it doesn't necessarily mean the stochastic will always reach that level. It can happen that it can turn halfway and go all the way down, just like it did somewhere here, So it's up to you on which confirmations that you should add, but you should have more confirmations as possible, but they shouldn't contradict each other. So it's a selling signal. We can see sellers are still strong, so just spot that good selling opportunity. Either you sell as this minor pattern is being broken, or you wait for your overbought zone to be reached. We go to the next pair, USD card. There we go on USD card. There we go. So it's the opposite of the other pairs. The USD card is moving upwards, starting from this area here. That's where our buyers entered the market, and they corrected here. They are also correcting here, and then now we have an interesting high here, which is almost at the same level as the previous high, meaning it can be a sign that your buyers are now struggling, that this guy who took the price here is now failing to continue with his move, meaning it can be an introduction of a downward move. So how are we going to see if it's an introduction of a downward move? It's simple. We can simply wait for this low to be broken. So as long as this low is not broken, it is still buyer's market. So everything that the market does above this zone, remember the tier of buyer's territory and seller's territory. So here going upwards, it is buyer's territory. So it is still buyer's market from here going upwards. But once this is being broken, then that's where we can give the market to the sellers. Although we can see that the buyers struggled to push above their previous high, but it doesn't disqualify this as an uptrend. It is still an uptrend. It will not be an uptrend when the low is being broken. As long as the low is not broken, it's an uptrend. So now, how should we trade? How should we go about this? Some people can see here and say, okay, I can see my stochastic is overbought, meaning that it is telling me that price still going to go all the way down. However, you need to understand that this move here, this corrective here, it is not guaranteed to be a long one. It is not guaranteed to last longer, because I told you that it is still an uptrend, so it is still buzz market. So this corrective, it is not guaranteed to last longer. So the best option in this currency pair, it is actually for you as a trader to stand by until this thing here is being corrected, meaning until this error is being solved. Because now here what we have is simply a question mark, that is it sellers or is it buyers market. What we have, it is half of the information. We have half of the information. It is not complete. So our information is not complete. It would be complete when this low is broken, or when price continues to push above this high here. That's when our information is complete. So when it comes to USD CAD, we are standing by. There is no action that we can take now because the market has not given us clear information. So we trade what we know. So if the market gives us what we don't know, there is nothing that we can do right there. I hope we are still together. So let us go to a next pair, and then I will just open for questions or other recommendations. So the purpose of this, it is not actually, as I said last time, it is not actually to give you signals or whatsoever, but it is a matter of understanding the steps of analyzing the market. It is just a lesson somehow. So signals are going to be posted in the Telegram group. So now we are just helping each other in terms of analysis. So what can we do? Okay, let me just also break this one down here. Okay, we have this market here, and it is an interesting one, USD JPY. You can see that it was moving down, and then it moved aggressively on the opposite side, meaning up. So as it was moving aggressively up here, you can see that now my internet is not stable. We can see that now it is actually almost approaching our moving average, which is the one that guarantee the market direction. So if the market bridges it, it is now buyer's market. And remember, it also goes hand in hand with the territory, that as long as price is below here, it is still seller's territory. It is owned by this guy who pushed the market down from here. So it is still his market all the way down below this level here. So what we can do right now, as we can see that looking at the lower time frame, you can see clearly that the market is still making higher highs and higher lows. Actually, there was a time here where the market was delayed, meaning there was a pause here. There was a struggle to the buyers. But however, we have seen a breakout of this high here, meaning the buyers, they were now back with this breakout here, which is seen clearly also in the high time frame. So them being back, they are now in a corrective move again, because this is the buyer's wave. It is an impulsive wave. So this one, it is a corrective, this one. So looking at the corrective, that's when now we should anticipate our next entry. There is one thing that I want you to actually note. Make sure that when you spot your data, remember I said when you look at the hard time frame, we are interested on the territories or on the price levels, meaning we're interested on the all-time lows and all-time highs. You see, so meaning when the price is slowing in between here, between the previous high and the previous significant low, we can do whatever the price is telling us to do in between this. It is only through reaching these levels that we really react we react after we take a in-depth analysis, or we are really cautious about whatever we are doing when it is close here. But as long as it is in between here, we can trade whatever the move within this move is showing us, whatever the structure in a lower time frame is showing us. For an example, here you can see that looking at the lower time frame, you can see price is flowing upwards. It is above the moving average. It is making higher highs. It has corrected through this range, and then it is now continuing to push all the way up. So now the step that is left, it is simple. It is to identify this pattern within a pattern and then wait for the pattern break. What am I doing? Wait for the pattern break here, and then wait for your stochastic to show you that, okay, now I am going up, because you cannot buy while your stochastic is still up here. So rather wait for it to be close to this 30 level or this 20 level, so then you are going to be buying. So for the fact that it is still here, it is still telling you that, okay, price at this level, it is still overstretched. So if it is overstretched, you cannot just enter, because it is still going to correct a bit and then goes all the way up. So wait for the corrective to be finished, and as well let your RSI move, your stochastic move from this zone. We do not want it close to this zone. I hope it is making sense. Let me just check a last pair, and then you can ask questions. What can I analyze here? Okay, this one is, there is Bitcoin, USD. Okay, we looked at USD code. A perfect pair. Okay, we are from here. Okay, here is another interesting one. Okay, I want you to keep in mind the first pair that we analyzed with, which was it was the GBP USD, which was almost the same scenario as this one, where we can see sellers pushing down, but on their second move they pushed a little bit smaller or lesser than before, meaning it was a dying momentum of the sellers. So remember, if it is a dying momentum of the sellers, remember our interest now, if the sellers are dying, we are no longer interested in them, but now our interest is in the buyers. If the sellers are dying, our interest is in the buyers. We are no longer interested in them. You see, we are interested in the buyers. So remember, the most important thing, it is to make sure that we buy the market as early as possible, so that we can go with the big boy. So now, if we enter the market here, remember, if we enter the market here, we can enter it in two different ways. We can either enter it low here, or enter it when it break out this upward resistance here, meaning we buy here, or we buy after it breaks out here. You see, so but now we have a very, very beautiful setup. We can see even price here is on top of the moving average, meaning it is now shifting from being a downward market into an upward market, as it is above the moving average in the lower time frame. So our aim, it is to make sure that we buy here. Why are we buying here? So that even if the market goes up and then continues going all the way down, we already have something in the pocket. You see, because it will push up, and then as soon as it reaches this level here, we are going to observe how it approaches this level. Remember, our important principle, it is that we are not interested in price reaching a significant level, but we are interested in how it reaches that significant level. So this is a good buying opportunity because you can see your oscillator is oversold, meaning it is like that price is going to continue to push up. So if you buy here, you put your stops below there and you pay attention on how the price approaches this area, on how the price approaches this line. So for you to hold your buying signal, you should make sure that price approach this line with increasing strength, with increasing momentum, or with increasing power. Because it can happen that here it's a beginning of an upward move. So for us to take advantage of this upward move from here all the way to up there, we should make sure that we pay attention on how the price reaches these key levels, on how the price reaches these key levels. That's the thing that is going to tell you that, okay, hold your trade or trail your stop or scale your trade or close your trade. So it's actually paying attention on how. So here, when you buy here, now listen to this. When you buy here and price pushes a bit up, make sure that you remove your stop loss and you put it at your entry point. Remember, this is a high risk trade. A high risk trade, it is a trade whereby it is not yet certain that it is going to take that direction. So we don't know, price is going to push up and bounce here, going all the way down. We don't know. So if we don't know that, that's where we have to really trail our stop. So you buy here, and once price move 15 pips above or 15 to 20 pips upwards, you take your stop loss, you put it to your entry point, and when it moves again 40 pips up, you take your stop loss, you put it at plus 20 pips, and then there you are ready to go, because even if the trade doesn't work, you won't lose anything, but you will gain some few profits. So that's the key. So we already left with 3 minutes. So if you have a question, you can just type it quickly so that I can attend to it, and then we go to sleep. Someone is drinking tomato sauce. Eden, are you just eating tomato sauce? Okay, if you have any question, guys, it's like you want to drink tomato sauce. Okay.
For me, it's clear. It's all clear. It's all good. So thank you for all the time that you have spent just to teach us this. Just thank you for your times.
Okay.
Yes.
So there is a question here. Someone is saying, you're getting sharp. What is your stochastic settings? Okay, the stochastic, it is 30 for the K period, 7 for the D, and 7 for the smooth. So it's 37.7, symbol like that. We are left with 2 minutes. Any other question before you go? Thank you, sir. The EMA is 150. Yeah, the moving average is 150. It's 150. The moving average is 150.
So I have a question here.
Yep.
I've seen on the lower time frames you wanted to buy, but if you look at the bigger time frame, it's still a seller's market.
Yeah, okay, let me break it down. There is what we said here about momentum. I once taught about someone who is running, that if someone is running here, he starts from here, let's say he accelerate going down, and you can see this amount of momentum he had, and all of a sudden he rests at this size, and then he pushes again all the way down. You can see that before he ran a lot, and now he is running a short distance, meaning that particular runner is decreasing in terms of strength. He is dying out, so he is likely to actually die, and when he is dying, that's where the market is going to be moving up. So here we are just buying here hoping that now the sellers, they are dead, just as you can see the momentum. However, remember I told you that it is likely that the market is going to bounce here and go down, continuing this impulsive move. So we buy here, taking a caution of this level here. So it is not yet buyer's market, but we are believing, as we see in the momentum, that the sellers are about to die. Even this corrective, it is too long. It is too long for it to be called a corrective. That's why we are taking the buy.